Hello, everyone, and welcome to the CFO Insider. My name is Amy Brownell, and every single Tuesday, I go live at 1 o'clock Eastern. That is 10 a.m. Pacific. Is that true? Yes, it is. Yes, it is. I did do the math conversion correct in my head. And we talk about all things CFO and advisory related. Today, we got a really great topic. It is the top KPIs that you're going to want to track for business owners to help identify if they're going to be successful, what to do about problems before they pop up. So we're going to get into that. But before we do, I want you to go ahead and hit that subscribe button. And that way you will be made aware anytime we drop new content, every time I go live, and you can join in on the fun. If you are here live, feel free to type any questions or comments you might have into the chat, and I will get to them as we go. And if you're watching this later, recorded, then please feel free to drop a question into the chat, into the comment section, and I will get an answer for you. Happy to do that. So let's dive into this. There's actually seven KPIs that you are going to want to track to really understand your client's financial health, the trajectory of their business. What does success look like? That is the question that these KPIs answer. So the first one is simply gross profit margin. So gross profit margin reveals how much you get to keep after every sale, after deducting the direct cost related to that sale. So let's do an example. Gross profit margin is, think of it like when there is let's say a t-shirt, and that t-shirt is going to cost, let's say $100 at the cash register. And let's say it costs $50 to make that t-shirt. So all we would do is take that $100 in revenue, subtract the $50 that it costs to make that shirt, divide it by the $100 that we sold the shirt for, and multiply it by 100. That is easy peasy lemon squeezy, the formula for gross profit margin. So it is important because it allows us to really take a look at our pricing strategy. It allows us to understand if it's costing us too much to make the shirts, if we're selling them at too low of a price, if the delivery cost is eating into our profit. So we need to take a look at gross profit margin. That's number one. Number two is net profit margin. So net profit margin is simply your net profit, so your revenue minus your cost of goods sold minus your expenses divided by your revenue. So what gross profit margin allows you to do is track how important, what the ratio, I'll say that's probably a better way to say it, what the ratio of profitability is as a percentage of total revenue. And this is important because you are going to be able to see, okay, is that number increasing or decreasing? Are we able to keep more of our dollars now than we were last year, last month, last quarter? Or are we keeping less? And then that will tell us if our profitability percentage is going higher or going lower, and then what we can do about it. In order to affect net profit margin, you are going to want to look at revenue, cost of goods sold, and operating expenses to see kind of where you can lower costs or increase revenue. All right, so that is number two. Number three, we've got customer acquisition cost. Customer acquisition cost is basically how much it costs us to it costs us to get a single client. So we put all of our marketing, all of our sales expenses into a bucket, and then we divide that by the number of new clients we've got, or new customers that our client has, better said. So we are able to really clearly understand if our marketing campaigns are effective, if what we're doing from a lead generation point of view is giving us the biggest bang for our buck, if it is financially viable, if it is sustainable, are we spending too much to get a client? So that is the importance of customer acquisition cost. Now, the fourth one is customer lifetime value. So customer lifetime value, it measures all of the revenue that you can reasonably expect one client to generate throughout their entire relationship with your client. So, for example, let's say we'll stick with our t-shirt example. Let's say you have two customers. One has come in, both have come in and bought a t-shirt. The question is, based on the length of their relationship with you, how much do we think that they're going to buy? Does a typical person buy 2 t-shirts over their relationship with you? Do they buy 5? Do they buy 10? What does that look like? Because that gives you an idea of how much each of those clients is worth. And then that gives you an idea of whether or not you're spending too much to acquire that client. So let's say the prospective client is only buying 1 t-shirt. Well, in order for that to work, if we're selling the t-shirt for $100, like we're getting $100, but if it costs us more than $100 to get that client, that's a no-go. So we want to understand how much it's costing us to get a client. So it really helps us maximize the amount that our client base spends. Maybe we can up that customer lifetime value by selling a piece of jewelry or a jacket or a vest, something of that nature. So that is customer lifetime value. Next, we have cash flow. Cash flow is, as you well know, super critical to a business, super important. It helps you understand what cash is coming into the business, what cash is going out of the business. So the formula for that is you take your beginning cash balance, you add in the cash that's coming in, you subtract out the cash that's going out, and then that leaves you with your final cash balance. And that is important because you want to be able to tell your client, hey, there's a cash shortage here coming up. We need to do something to prevent that. Do we have enough money to pay our bills? Do we have enough money to make an investment? Do we have enough money to invest in growth? So having a knowledge of cash is super important. Cash, as you know, is king. It is the lifeblood of any business. So we want to make sure that we are able to talk to it. We need to be able to pay our employees and pay rent. And we want to make sure that we have a positive cash flow, meaning we have more cash coming in than we have cash going out. All right, next we have conversion rate. Conversion rate is the percentage of actual leads that convert into sales. So let's say in our t-shirt example, let's say we have a store and 10 people walk into the store. And of those 10 people, 2 buy a t-shirt. Our conversion rate would be that 2 divided by that 10, 20%. So conversion rate is super important because it helps us understand, is our marketing messaging correct? Is it hitting on all cylinders? Is it informing us about maybe what's happening in our store or on our website? We want to make sure that we are able to really hone in on improving conversion rate. We want to convert as many people who come into our store into buyers. So we want to make sure that we are optimizing we want to get that number as high as humanly possible. Now, the last metric, the last KPI that we want to track is payroll as a percentage of revenue. So payroll is a percentage of revenue. Why this is important? It really helps you identify whether or not you've overhired or are underhired. So you take your total payroll, your benefits, all of those payroll lines on your P&L, and you divide them by revenue, and it gives you a percentage. And if that percentage is going up, that means that you're spending more on payroll and the sales aren't quite covering it. If it's going down, you're becoming more efficient, and that's a great thing. So those are the 7 KPIs that every CFO should know and want to track and manage on behalf of their clients. I hope you guys enjoyed today's episode of the CFO Insider. Like I said, if you have any comments, questions, feel free to type them into the chat. I will get them answered for you. And we go live every single Tuesday at 1 a.m. Not 1 a.m. Ooh, that'd be early. 1 p.m. Eastern Time, 10 a.m. Pacific Time. And if you want to learn more about becoming a fractional CFO and what that looks like, you should join my upcoming Game Changer Challenge. It is happening soon. And the link is in the description of this video. It's gamechangerchallenge.com. And if you go there, you can register, grab your seat. We're going to talk about what exactly the life of a CFO, fractional CFO looks like. We're going to talk about getting clients. We are going to be talking about some of the skills. So you are definitely going to want to stay tuned. Sign up for that. It's coming up soon. gamechangerchallenge.com gamechangerchallenge.com. That's it. And I will see you next week for another edition of the CFO Insider. Have a great weekend.